You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means there's no rest for the wicked. I'm coming in hot, straight from a doubleheader of options boot camp and right into the world of futures. Yes, it is time for the Futures Rundown. My name, of course, Mark Longo, and that doubleheader, yet another reason why you should be listening to the full network, getting all the shows out there. And of course, if you're up for it, not everybody is ready to take the leap to the dark side, but if you are, theoptionsinsider.com/pro is the place to go where you can hang out, have a good time. We've got, who is it, Nichols in the chat? So, triple header, he's glad he made the live today. Yeah, it's a good day to be in the live. You're getting a lot of fun stuff coming your way. Where can you join the live? Get your name in the hat to potentially win the Pro Trading Crate for the month of April. Of course, options oddities every week, Pro Q&As, all kinds of good stuff. You're going to get all the stuff I do from OIC. Guess what? Guess who's getting that first? You folks in the Pro. Theoptionsinsider.com/pro is the place to go to learn more. You also get to hear me just go from show to show like a madman, like I'm doing today, listeners. No rest for the wicked. Luckily, I am joined to spell my voice by our good friend, even though he hasn't been on the old Futures Rundown since December 4th of last year. That's an eternity. In these markets, 2 hours is an eternity, let alone all the way back to December of last year. Our good buddy, Mr. Rich Excell, the assistant professor over there at the University of Illinois, also the director of the Derivatives and Trading Academy, a.k.a. Hogwarts for derivatives trader. Mr. Rich, welcome back to the show, sir.
Hey, Mark, how you doing? Thanks for having me back. Has anything really gone on since December? It seems to me like it's just been kind of going nowhere, right?
It's been kind of quiet. Good time to be running a derivatives and trading academy. How are things in the Hogwarts of derivatives trading, sir?
The Hogwarts has been terrific. This is, while these are not necessarily the it depends on your positioning. This can be the best of times or the worst of times, but I think from a school standpoint, these are definitely the best of times because there's a lot that we can talk about. There's a lot we can learn. There's a lot of questions the students have. There's a lot of opportunity to work through some things and think about how we could have done things better or how things actually worked out quite well. But I think more importantly, it's about trying to find and instill that discipline and risk management. And these are the best types of markets to test that out.
If ever there was a time, sir, for a defense against the dark arts or perhaps dark markets class, now is the time, sir. Just think how many kids you'd have beating a path to your door if you had one of those.
Without a doubt. And I think the line gets larger, and I think that's typically usually because bad things are happening, not good things. And so I think you're right. The defense against the dark markets is now the right time.
I'm sure the Potter folks will be very kind with their licensing rates. You are an educational institution after the end of the day. So check it out, listeners, if you want to learn how to defend against some dark markets on your own. As we keep on rolling, let's see how dark these markets are. It is time to enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, listeners, a lot going on in the world of futures just this week, but like I mentioned at the top of the show, we haven't been joined by Rich in quite some time, a literal eternity in these markets where everyone's trading 0-day or doing intraday swing trading using futures. So let's start there, Rich. Again, a lot going on. Obviously, we had, of course, since the last time we talked to you, we had, of course, the inauguration, the subsequent kickoff to the trade war, and then pretty much all hell broke loose. What's been catching your eye and lighting up your tape since the last time we chatted, sir? Then we'll get into this week's action.
Wow, there's just so much to unpack, and I think the beauty of all of it is that literally every asset class has been affected at this point, and we're going to go through all the different futures markets, and I'm looking upside and downside list, and of course every one of those has been impacted in some way, shape, or form by what's going on in the news and the headlines, et cetera. In the reordering of global trade is really kind of the ultimate thing that's kind of that we're talking about. And I think to me, I'm trying to ultimately keep my anchor, keep my ballast focused on the 10-year Treasury futures, as Treasury Secretary Bessent has told us that is the most important indicator to see whether or not the market thinks the policies are having success or not. And then from there, you can step back and say, okay, if the bond market is saying we're not having success, what does a lack of success look like? And what does that mean for the other markets? If the bond market thinks that maybe some things are starting to work, or some of these headlines that we're playing a little bit of headline roulettes are good, or are they good or bad? Let's see what the bond market thinks first, and then go to the other markets and start to discern from there. Of course, in the 10-year Treasury yield, we saw the market really enjoyed the fact that Treasury Secretary Bessent was in there with some market experience, some hedge fund experience, a lot of credibility for a government that has to roll over 7 trillion of bonds and raise 2 trillion more, so a total of 9 trillion. You definitely need some steady hands at that rudder. And so I think that's an important place to really start and look. And I think that keeping my eyes on that really helped, because a lot of the market was like, well, what happened? I thought Trump cared about the stock market, et cetera. I thought Jay Powell cared about the stock market. But the reality is they don't really care about the stock market. They care about the bond market. And the market always, and we know that going back to the time of Clinton. Remember the famous James Carville quote, when he dies, he wants to come back as the bond market because it can intimidate everybody. And he's absolutely right when it comes to that. But it also links, as we know, that's why we care about 10-year Treasury yields, because ultimately every market is priced off of that. Valuation of stock markets are priced off of that. Other sovereign bonds are priced off of that. Corporate credit and mortgages are priced off of that rate. Even futures curves are priced off of that rate. So everything we look at comes from that yield. And so there's been a lot of volatility, but I think if you've been staying anchored on that, you've been able to kind of helpfully trade some of this range that we've seen, trade some of this range in the stock market, of course, having some discipline. I think it's interesting because to me, the market that's probably most impacted by everything that's going on is the agricultural market. We have such positive terms of trade when it comes to agriculture. We've seen that since the 2018-2019 trade war. The agricultural market is the one where the retaliation is going to happen. It's a market where frankly, a lot of the people were voters of this administration. And so, are we going to be willing to take some pain in that market with retaliation? So I think that's another market that's super interesting to watch. And then, of course, what I thought was really, really interesting price action today was in the commodity market. The commodity markets are signaling to us maybe not just a U.S. slowdown or a U.S. recession, as we saw in some of the data that's come out from the regional Fed surveys as well as the GDP, but maybe a global recession because we've seen weaker Chinese PMI data coming out, and the commodities are trading like on the day and certainly over on a year-to-date basis. Like there might be some more. When you talk about dark markets, there might be some more nefarious things going on below the surface, and not just the trade headlines. We might be seeing a slowing of global growth. So there's a lot that's going on, but I think to me, the first place I look is a 10-year and then kind of work out from there and say, okay, all of this news that we're seeing, where are the trends and what's going to be impacted the most and what's going to be impacted first.
So a lot of people have been debating for a while which tail is wagging the dog. A lot of people putting that blame on the bond market. Sounds like you are in that camp as well. The bond market is the driver of all things, at least on the equity front right now. So.
I absolutely think that's the case. I think, and I think you look no more than what we're seeing even this week, right? Because this week is starting the first of 2 weeks of the busiest earnings season in the year, and usually of the quarter, I should say. Usually when we have earnings, that's when we forget about macro and start focusing on micro in the stock market. It becomes a market of stocks and not a stock market. But what's happened is we see these moves that are kind of being driven by the kind of the global macro around trade, and stocks are trading off a little bit. That recession feeling is coming into the stock market, even though frankly the earnings have been pretty good. They've been actually, if we look in aggregate, they've been pretty positive across the board, across sectors, certainly even across the different capitalizations within the market. And while we would be worried typically about the guidance with so much uncertainty, most of the companies are really saying that things are looking okay. Led by Visa, that's saying that consumer spending actually looks pretty decent right now. And so I think from that standpoint, you would normally think if this would have happened 6 months ago, the stock market would have ripped higher. But because it's happening in the face of a global macro market where the macro is telling you that maybe there's something a little bit more going on, that's why it tells me that it's the macro, not the micro, that's leading the way. It's the bond market and the commodity market, not the stock market, that's telling us what to focus on.
Let's see what the futures world is focusing on this week, listeners. Is it a hot week? Let's see what's lighting it up to the upside and the downside this week. Let's keep things positive yet again. Let's go to the upside first. This time, we can only do a top 5 because we don't need to make the asterisk or the caveat for VIX. VIX ain't gumming up the works to the upside, at least this week. Let's get out there, listeners. Number 5, we're going out to the NASDAQ 100 E-mini, up about 3.3% so far this week. So a good little run here for the NASDAQ. That's, of course, factoring in the fact that it's taken a bit of a shellacking out there today. So interesting stuff out there. Yeah, it's given up about 1% today. So, of course, that 3.33% is even with that. So that shows you how much of a run we had since the start of the week in the equities. A typical year in the equity markets, what's it, 7 to 10% right now? So good chunk of that coming to the upside just this week in the NASDAQ. Number 4, listeners, you may have heard the earnings for Starbucks, no bueno out there today. A lot of that is driven by the endless upside we're seeing in number 4, aka the price of coffee, up another 3 2/3% this week. I heard Starbucks talking about things like trying to speed up their orders and everything else. At the end of the day, not much they can do about their core product continuing to skyrocket in price. Number 4, coffee, up 3 2/3% this week. Number 3, from coffee, we go to the land of dairy. I can't go there because I'm lactose intolerant, listeners, but you folks can go to the land of dry whey, up 4 1/3% just this week. Number 3, it's a frequent offender. This week is to the upside. It's nat gas. I should say number 2. Number 2 to the upside, listeners. It's a nat gas, up 4 3/4%. And the number 1 green mover on our screen this week, upside mover, call it what you will this week, listeners. It's our old pal Oats, up 5.81%. Rich, a lot of people have been lamenting that we're not seeing a ton of action in ags as a result of this trade war outside of products like soybeans, but oats putting the lie to that this week? What's catching your eye this week in our upside movers list?
Well, I think you could go through the entire list, and there's a lot of different drivers. There's definitely NASDAQ, coming in there. We as I mentioned before, start of the week, expectation on earnings of some of the big Mag 7 names, and so the NASDAQ market being driven by a little bit better earnings early on, even though, like you said, it today was a little bit of a different story. Something to keep watching on there, because that's clearly, we know, where not only is there a lot of interest, that's where there's been a lot of global interest. That's been where people have generally been pretty overweight. So I think that's the best gauge clearly for the markets. That coffee measure, though, that to me is certainly super interesting when we're thinking about you think about the importance of inflation, and when you hear the Federal Reserve Chairman talking about how they're hesitant to raise rates because inflation is staying persistently higher, as we've seen in the data that came out from the PCE and the GDP today. More importantly, if you look at the survey data from the University of Michigan or from the Conference Board, where they have consumer inflation expectations for the next year, those levels coming in like around up 6 or 7%. I think Conference Board yesterday was 7% in Michigan, when last week was over 6%. The consumers are not only have we seen high prices, but the expectation is that prices are going to stay considerably higher. And I think a lot of that comes down to things like coffee, things that you spend your money on a day-to-day basis. It's hitting you in the face that those prices are higher every time. Maybe not every day you go to your barista, but certainly quite a bit. And it's certainly not, if you're not drinking black coffee, you're drinking a latte or anything, you're going to get hit by those dairy prices too, which is not making anything easier. In fact,
that's true. Double whammy. If you put a little bit of latte in there, all of a sudden your prices are skyrocketing, sir.
They're through the roof. And I looked at something I wrote this weekend, that Bloomberg's got a bacon, egg, and cheese index, and the prices of that is up considerably as well. So if you're eating your breakfast out and not having some cereal at home, you might be struggling. But speaking of cereal, you got oats in there, so I don't know what kind of cereal you're eating. But that's certainly something with trade. When we've got a lot of cross-border traffic with Canada on the oats market, it's definitely something that's going to be right in the crosshairs. And of course, we just had a Canadian election this week, and the Mark Carney won the election, and he's certainly going to be willing and has talked about taking on Trump when it comes to trade. And so I think when you look at some of these ag futures like oats, where there's and even the dairy products, where there's a big cross-border U.S.-Canada trade, that's something where there's going to be that's going to be a pretty hot and heavy area, I think, with a new administration coming in Canada. I think that's something I definitely want to keep my eye on. And then you mentioned natural gas, and natural gas it's always on one of the lists, right? Upside or downside. That's just one that you either want to be short, have your butterflies on and turn off your screens on the short side, or you want to own some straddles and really aggressively trade the deltas. I think, to me, getting a handle on a direction right now is pretty tough.
All right, let's get a handle on some downside movers right now, listeners. This is one we did have to expand to a bottom 6. You'll see why in a second. Number 6, though really number 5, listeners. It's our old pal, good old heating oil, coming in at number 6/5, off 3.8%. Number 4/5 coming in above a heating oil, listeners. We haven't talked about cotton in a while, but cotton back on our downside list. Cotton number 2, to be precise, off 4.14%. Number 3, listeners, it's lithium. The EM's having a rough time right now. Uranium not on our list this week, but lithium is off 4.38%. Number 2, high-grade copper, off 5.81%. Obviously, construction demand, a lot of demand domestically down. Of course, copper also a byword for Chinese demand and the strength of the Chinese economy, seeing some maybe disturbing numbers out of China this week, listeners, as well. So all of that weighing a little bit on copper. Copper coming in at number 2. And what is really number 1? We got a two-parter here, listeners. It's not what you might expect, though. We talked about ETH being our number 1 loser for the year to the downside. That's why we have to do a twofer there. But no, this week we have a twofer to the downside, sharing the number 1 spot pretty much. They're a couple of percentage points apart. It's crude oil, either the Brent or WTI variety, whichever flavor you prefer, whichever poison you like. They're both taking the number one spot. Technically, Brent is right below it, 6.57%. WTI coming into the downside off 6.79%. Rich, it seemed like when Trump took office on the heels of Drill Baby Drill that it didn't seem like the momentum was to the upside anyway in crude. We've seen a little bit of up and down since then, but mostly down, and now seeing a lot more downside across the energy spectrum this week with a little bit of copper and lithium and cotton thrown in for good measure. Sir, what are your thoughts?
Yeah, I think you're right. You got to start with that oil market because while Drill Baby Drill sounded like increased supply and maybe some lower prices, I think there was an expectation that demand was going to stay firm, and that while there would be a price decline, it would be steady and orderly. But what we've seen now is the risk of, at least in the market's perception, of a falling demand coupled with increased supply, which is not a good combo. And we're seeing that, and it's not just a U.S. issue as we see with WTI, but it's Brent as well, right? So the more global of the oil products. So you're seeing that combination there again, pointing to what I talked about with the commodity markets really starting to price in a global recession at this point. And I think that's something notable. And you mentioned copper. It's not. It's of course it's a U.S. economy. It's electronics. It's plumbing. It's housing. It's everything you can think of. It's the electrification of the economy. But that's not just U.S. That's China. And copper had held up pretty well until recently, and so these big moves now, where maybe the copper market's catching up to the downside with what the oil market and even some of the other metals like aluminum and steel have been telling us all year long. Copper might be finally catching up a bit to the downside. Lithium clearly in the crosshairs of trade as well, given that we rely so much on it from overseas. And now, are we ready to can we bring it back to the U.S. or not? So I think when we look at lithium and cotton, we're talking about products that are high in demand here in the U.S. for products, but where we aren't sourcing that as much ourselves, and so a little bit less of a player. So the global markets are going to have a bigger impact on that. So I look at that and I think to myself, this is not just a U.S. slowdown. This is the commodity market telling you got to be worried about a global slowdown from these trade numbers, and that's a different ball game to really think about, because really the first quarter of this year was about reallocation, maybe out of the U.S. into some other stories in Europe, into Asia, et cetera. It was just maybe a rebalancing of portfolios. And if we looked at global indices, or if we looked at the combination of a global stock index plus bond markets, returns were not really that big a deal. They were maybe marginally small if I kind of on a balanced basis. But starting in April, so month of April has really kind of changed the tone on that to where the downside risk is starting to creep in across a number of products. And that's something that we have to be worried about from a standpoint of how you want to position your portfolio. But from a trading standpoint, that's going to potentially lead to a lot more interest, a lot more volatility, and potentially a lot more volume. So it creates opportunity too. You just got to make sure that you're positioned for that opportunity.
Let's see what opportunities are presenting themselves today in the futures market. Is it an explosive day? Yeah, it's decently active, I would say. We'll expand it to do a top 15 as well. You'll see why in a second. We got some micros making their way into the list this week. We normally would kick them to the curb, but that would be distorting the picture today. You'll see why in a couple of seconds, listeners. Number 15 today, it's corn. So just talking about the ags not really playing ball. Corn's looking decently active, not lighting the world on fire today. 182,000 contracts, not making it into the top 10, but into our expanded top 15. You'll find corn. Number 14, Rich's old stomping grounds are going out to FX, in particular the euro. The June contract, 187,000 contracts on the tape. And it looks like we have, once again, pretty much all June on the tape with the exception of two. One I just read, corn, that was July. And the other one, you can probably guess what it is. We'll get there in a second, listeners. Number 13, a metal that's been hot of late. It's up, it's down, it's all over the place. It's gold. 194,000 contracts on the tape today. Number 12, to the rates we go. The Ultra T-Bond, 271,000 contracts on the tape. Number 11, we were just talking about it, leading the tape to the dark side this week. It's crude oil, the WTI variety. 379,000 contracts on the tape. Now, breaking into our top 10 listeners. What is making our top 10 out there today? Kicking things off with the T-bond, the 30-year T-bond listeners. 432,000 contracts on the tape. Number 9, keeping it in the world of rates. It's the Ultra 10-year, 469,000 on the tape. Number 8, our old pal, the NASDAQ. Like we said, NASDAQ having a pretty wild week. The E-mini and the NASDAQ, 566,000 contracts on the tape. So number 8, we're finally north of 500,000 contracts. Number 7, the 2-year note, 668 on the tape. Number 6, it is our second and final non-June contract on our list today. Can you guess what it is? You probably can if you've been listening to the show for a little bit. It's our old pal, 3-month SOFR, once again going all the way out to December, 670,000 contracts on the tape there. Number 5, now we're taking another leap up. We're north of 1 million contracts, listeners. It's the 5-year note, appropriately enough, coming in at number 5 this week. 1.19 million contracts, so a hot day on the 5-year note. Number 4, right above it, we got our old pal, the S&P E-mini, 1.23 million contracts on the tape there. What could beat the E-mini today? Well, itself, the S&P 500 micro, listeners, coming in at the number 3 spot, 1.47 million contracts. Number 2, yes, I said number 2. Again, this is why I included the micros this week. Number 2 is our old pal, the 10-year note, 1.67 million contracts. What could possibly usurp the big dog to take the number 1 spot today? I'll give you a hint. It's a micro. It's our old pal, the NASDAQ 100 micro, 1.71 million contracts. Now, again, take the micro volume with a big grain of salt. It's not quite the same thing as some of the other contracts, or most of the other contracts we're talking about in our list in terms of notional size and value. But wanted to include them today because it's not often we see anything manage to usurp the 10-year note. And this week it happens to be the NASDAQ. Rich, a wild week in NASDAQ territory. We've got the broad spectrum of products breaking into our top 15 this week. We got ags, we've got metals, we've got FX, we've got a ton of rates and a ton of equities and a little smattering of energy there as well. I know you talked about a lot of these already. Anything in particular standing out on our movers and shakers list this week, sir?
Yeah, we really touched them all there, didn't we? That's impressive list. How can you not talk about FX, because it never gets talked about enough? And I think honestly, right now is FX markets have inflection points and then they start to trend, and I think this might be one of those inflection points where you might start to see a trend. FX markets are those things that are really kind of boring for about 5 or 6 years and then get interesting for about a year and then you forget them again. And so I think we might be at a point where you're seeing the potential for a new trend asserting itself. That's something where you want to just have that on your radar, whether it's something you trade or not. You might want to at least know what's going on there, because it's going to be impacting some trading decisions. It's going to be impacting whether or not global investors want to participate in our U.S. auctions. It's going to matter whether or not there's going to be opportunities for U.S. investors overseas, and it's going to impact our inflation numbers too. So you really want to keep an eye on that. But I think to me, really just kind of looking through there, just the micro showing up, as you said, take the volume numbers maybe with a grain of salt. But I think the fact that you're seeing some really big activity in the micro, but at the same time seeing some of the bigs having some volume too, is indicative to me that we've seen, or just kind of highlights that we've seen this this kind of difference of views between the retail and the institutional community. Excuse me. You continue to see more data that points to how retail investors have used this pullback in equity markets in particular to be adding to exposure, buying the dip, and things of that nature, while institutional investors have been the ones that have been blowing out of positions. And I think that's interesting for me to see those kind of volume numbers. Here we are on April 30th as we kind of tick across to May 1st. A lot of the money institutionally that was kind of blown out of various markets this month in the blow up of different, whether it be Treasury basis trades, swaps basis trades. You see the equity market stress with the implied correlation going through the roof. You've seen the FX carry trades get kind of blown out. The leveraged investors had a really, really tough April. And leverage investors, when you have a tough April, you get your positions closed down and you sit out the rest of the month and you can come back the new month. So tomorrow, starting the new month, how are those leverage investors going to respond to the price action we're seeing? Where are they going to jump in, et cetera? I think that's one of the reasons we're seeing the micro tick up, is because you've had a lot of the leveraged investors moving to the sidelines for the latter half of the month here. Will we next week? Will you be seeing that same thing, or will the levered investors be back in there? The interesting catalyst to me right there is you want to think about what's going on in the volatility markets, because for capital is going to get allocated within hedge funds and even across pension funds with implied volatility as a really big input to that. And as implied volatility goes up, position sizes come down. As implied volatility comes back lower, position sizes can increase. And so I think keep an eye on the VIX, keep an eye on implied volatility, keep an eye on whether or not you start to see some of these big contracts move to the top of the heap, because that tells you the leverage investors are back, and then you can say, okay, now what are they doing based on the price action?
Well, speaking of volatility and VIX, that's a perfect segue to what's lighting up the tape, what's leading the trend to the upside and to the downside for the year. Again, it's only April, but we've already seen a lot of products have full years and then some over the last few months. Sometimes they do it intraday, listeners. Again, these are wild markets. So if you're not comfortable diving in, it's okay. These are not markets for the timid by any means out there. Let's go to the upside first. Keep that trend alive. Again, we're doing a top 6 for the year. You'll see why in a second. Number 6 / really 5 for me, listeners. I'm going out to FX again. We don't talk FX that much. I think it's because Rich is on the show today. All these FX names are breaking into our movers and shakers right now. Number 6 / 5, it's the Brazilian real, up 11 2/3%. So a good little run for the year so far for the real. Number 5, it's really actually 4. Copper. We were just talking about copper earlier. So even though they're having an interesting week out there this week, giving up a nearly 6%, they're still up for the year, still up about 12.5% out there for copper, listeners. And the number, let's call it the number 4 spot. And then let's go, 5 / 4. And then number 4 / 3, I know it's confusing. Soybean oil, listeners, up 19.61%. We were saying one of the standouts really for the trade war right now in the ag complex is soybeans, just moving all over the place. Soybean oil so far for the year up 19.6%. You know what it is coming in at number 3 / 2, listeners. It's gold, a wild year, up 23.13%. Seems like we saw a little bit of resistance, to put it mildly, up there at the 3,500 level. Gold hanging out closer to 3,300 right now. Still a banger year, up 23%. You know, things are wild when gold's up 23% already year to date, even after the wild sell-off that it had. Number 2 / really number 1 on our list, it's coffee, up nearly 30% so far for the year, listeners, up 29.92%. When you see that number, you know there's no way Starbucks numbers could have been good, which is why they chose to focus on things like the speed of the order and things they can control, because they can't control coffee up nearly 30% this year after a banger year last year as well. That's a rough one. And then our technical number 1, even though, like I said, I've said before, this has an asterisk, a caveat next to it. It's the VIX, again, up 32.33%. I put an asterisk next to it because at the end of the day, it's not real in the sense that obviously it did move that, but it's not like some of these other commodities where they will move up to that level and pretty much stay there. The VIX will eventually retreat back down, probably pretty aggressively. So it's number 1 technically right now because it is a future. It is trading at that level. But just put an asterisk next to it because we shouldn't expect. If we see that at the end of the year, then we know this trade war has gone wildly wrong. There's a lot of other things going on in the world. Mr. Rich, what are your thoughts on our year-to-date upside movers and the fact that VIX once again topping the list, sir?
Yeah, I think well, VIX, whether you trade it or not, you want to keep your eye on it because it like I said before, it dictates money flow. When VIX is moving higher, that's bad for levered investors typically, and you're going to see positions come down. Even if they're making money, they're going to take their positions down because it's all really just systematic at that point. So you can just understand you're going to have less liquidity in the markets, and you're going to find out where the crowded levered positions are because you're going to start to see price action going against that. So just keep it on your radar. And similarly, when it comes lower, that you're going to start to see those investors increase in size of position. So that's why you want to know where the VIX is, even if you don't trade it. Coffee is just, I mean, shake your head. It's just, I'm a huge coffee drinker. That's painful to watch, painful to see. Thankfully, I'm not putting any milk in my coffee, so I'm not getting the double dip. But that still is not. But you see it, right? You just go and you stop and you get coffee anywhere, and that the number shouldn't surprise anyone. Gold, like you mentioned, always struggles around numbers, but the trend is pretty strong and pretty clear in gold. And so I think that's something where we talk about the de-dollarization, potentially trends in FX, as I mentioned before. Like if you don't want to own dollars, that's fine, but do you really want to own euros or yen or sterling or any of that other stuff or yuan? No, that's why people are opting for gold. And so that de-dollarization trade is being played out really in the gold market more than anything else. Soybean oil, I think, is super interesting because we talk about how soybeans themselves are kind of a pawn in the game of trade because China has historically been the market that, or the foreign market that imports the most of the U.S. soybeans. But starting with the 2018-19 trade war, we've seen a lot of repositioning to where it's the domestic soybean oil markets and it's the domestic crush consumption, whether it's synthetic aviation fuel or other things that are going on. You're seeing the Chinese demand being replaced by some of these domestic players with like biofuels and things of that nature. So that's certainly something to keep an eye on. Will that continue? Can that continue with the price of crude, et cetera, coming down? Because that's going to frankly impact that. We've seen that even with ethanol and corn in the past too. So that's something to keep on the radar. It's definitely been a positive story within the ag markets, but keep that going on. And we mentioned copper before. It's had a good year on expectations that China was going to do well, but it's starting to catch up a little to the downside. Will that continue? And then a little birdie told me to, within the FX markets to keep their eye on South American currencies because that's where some of his smarter money clients are spending their time, is looking at maybe getting long things like the real. So that's from an FX carry standpoint, that's where some of the smarter money wants to hang out to get exposure to these emerging markets that are levered to markets outside the U.S. and where you can pick up some yield as well. So that one doesn't really surprise me.
All right, let's see if we can find any surprises to the downside. Once again, we're doing a bottom six, listeners. You'll see why in a second. If you haven't listened into the show, you probably already know why. If you have a number 6/5, listeners, it's our old pal WTI having a rough year. Drill, baby, drill, not exactly working well for it on top of the reduction of demand from the trade war. Everything else that is weighing on the crude oil side right now. WTI off 17.3% so far for the year. Number 5/4, it's our old pal lithium. The EMs having a rough time so far this year, off 21.06%. Number 4/3, back to the land of dairy we go. It is dry whey, off nearly 28%, 27.87% so far year to date. And number 3/2, listeners, it's our old pal OJ, a rough year, off over 40%, 40.33% to be precise. What could possibly usurp that, take the number one spot, listeners? You know what it is if you've been listening for a while. Number 1/2, both of them together because they're tying for the top spot, listeners. It's the big and the micro ether futures off exactly this week, exactly the same, 49.12%. Usually we see a little bit of wiggle room between the big and the micro, a couple of fractions of a percent. This week, both of them off 49.12%. So once again, sad news for the Ether bulls. A rough year so far on the Ether front. Rich, one of the few complexes we haven't really discussed yet is the crypto complex. It's kind of been rough sailing for the Ether crowd. Bitcoin and some others having a nice little resurgence. I know you're a fan of Solana. Solana starting to come back to life. What are your thoughts on what we're seeing out here in crypto so far this year, and anything else on our year-to-date list catching your fancy, sir?
Yeah, I think, Ether obviously is the second biggest coin, and it's going to be on there. And I think sometimes people will look at that and want to equate that that's what's going on in all of crypto. But to your point, now Bitcoin is pretty close to flat on a year-to-date basis with this rally we've had of late. And I always think of crypto as kind of the leading indicator, the canary in the coal mine, if you will, on what people are thinking when it comes to risk. And the fact that Bitcoin has traded higher, has me kind of, perking up a little bit. Ether got its own idiosyncratic problems. I think part of those problems are because coins and chains like Solana are kind of taking its market share. And so I think that's worth noting. But then you've got other positive things out there in Bitcoin too, like for instance, Arizona saying it's going to have a strategic Bitcoin reserve. So I think there's some positive stories in crypto, but not in Ether. So do your homework. Be careful. You're buying one is not the same as buying all of them. We've talked about lithium whey and crude before. Didn't talk about OJ. I love to always see what's going on with OJ. It kind of goes back to Trading Places, one of my favorite movies of all time. But this one surprised me. I have to say, I didn't realize the price action collectively this year had been so poor in orange juice. I guess it's time to switch from your morning routine from coffee to orange juice. It looks like the market's telling you what to do.
And that music is telling us we're out of time for this week. But Mr. Rich, before we go, we did a lot of living. We packed a lot of products onto the show this week. But before we go, if there's any product you really want to discuss this week and somehow it didn't make it onto any of our lists, by all means, have at it. And then B, if folks are intrigued, maybe they want to check out the Hogwarts for trading for themselves, where should they go? What should they do?
First of all, the best place to find me is on LinkedIn, on X at my handle is at Excell Richard, or on Substack, where I write Stay Vigilant and kind of give you my thoughts on what's going on and maybe how you want to think about them. The one thing I would say is we talked a little bit about the ags. I think ags are going to be an interesting place to look over the coming weeks. We've got a WASDE report coming up, the World Agricultural Supply and Demand Estimates. So we'll have a lot of information on what the ag markets are seeing and thinking when it comes to trade. Agricultural products are right in the crosshairs of what's going on in terms of trade. So understand what the farmers are thinking and what they're doing in terms of how the planting season is going. Take a look at that coming out. Then I'll have an Excel with ag options coming out ahead of that. So look for that on the CME Group website, where I write for the Excel with options and Excel with ag options. But that ag options will be talking about WASDE.
There you go. Check them out. If you're not doing so already, you're missing out. Excel with options. He's also Stay Vigilant over there on the old Twitter. I hear you're hanging out with all the cool kids on Substack as well, Mr. Rich.
That's stayvigilant.substack.com. That's where all the cool kids are these days. We've moved to Substack.
Yeah,
it's a little bit more for talkative people like me. It's a little long form. Sometimes X can be constraining.
All the cool kids hanging out on Substack. You're there now. Dr. Vix, Mr. Passarelli, just on the last show. A lot of people hanging out on Jim Carroll, Vixologist. A lot of people hanging out on Substack. It's like 2017 is everything old is new again on the internet. I love it. So check them out over there on Substack as well, listeners, if you are intrigued. That's going to do it for us on the network today. How much more do you want? You had a triple header already. I see our folks had a good time. Glad our pro folks had a good time getting all three shows in their air holes already. They don't have to wait for any on-demand shenanigans, listeners. If you want to join those folks, have a great time, talk some trades. Man, there's a lot of trades that were going up in our chat today. I'll have to go back, and I was busy hosting. I don't know if you know that, so I couldn't see all of them, listeners. So I'll have to go scroll back and see what you folks are up to. Give you my thoughts maybe on oddities. Maybe we'll talk about them later this week. Speaking of later this week, coming back tomorrow with another doubleheader. We'll have our buddy, the Flow Master, and Uncle Mike joining us on the option block, followed by This Week in Futures Options. Who's going to join us tomorrow? Got to tune in to find out. Friday vol views coming in hot and heavy. I just got word from the producer, listeners, that, you know what? This is how responsive we are. Ask, and you shall receive. Some of our folks in the pro chat were saying it's earnings season. It's a wild time out there. Might be a good time to have Matt come on, join us, talk a little earnings, Vol from Orats. Well, guess what? He's joining us on VolView, so ask and you shall receive. Maybe if you ask nicely, maybe he'll do a little double duty on oddities as well. So stay tuned for a awesome doubleheader on Friday. You know where to go if you want to get access to all that stuff immediately, including oddities. The only place to get oddities, theoptionsinsider.com/pro. It's always a banger when Matt joins us on oddities. He's always got some wild trades, and chances are some funky constructions that you haven't thought about when you're putting on your trade. So stay tuned for that. Should be a good time. Theoptionsinsider.com/pro is the place to go to get all that. Then I'm traveling down to the Options Industry Conference next week, so we'll see what we do on the futures rundown front. So stay tuned. But either way, we'll see you back here next week with a lot of great content. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.